You are listening to the ESG and Coffee Podcast on investment, strategy, and sustainability, hosted by Graham Sinclair.
We are seeking to provide for our clients financial well-being and to make a positive impact through their investments, period. And I guess what I would go on to say is that we don't see any contradiction in those two objectives. It's often in the past been presented as an either or. Right. So for us, it isn't an either or. It's an absolutely necessity to do both. Some of the work that we do as engagement professionals to be akin to kind of working with folks, we're allying with folks internally who are making the case about these pesky investors who keep on asking for these reports and this disclosure, and I jokingly say, if you need us to be the bad guy, please, by all means, make us the bad guy. Yeah. But there's also the attitude that, to your point about Larry Fink, there is an increasing recognition from the absolute top echelons of firms that these issues are significant, cannot be ignored, and there has to be a robust, thoughtful response. I am still optimistic. Good. I'm glad that I work in kind of a part of our investment ecosystem, which is pushing hard to address these issues.
I'm excited for you to listen to the interview with Lisa Hayles, investment manager at Trillium Asset Management in Boston, Massachusetts, USA. I first met Lisa in London in the late 2000s when she was working for one of the original ESG research and analysis shops. It was called EIRIS, and it's now part of Moodys ESG. We shared a memorable late-night black cab ride adventure with colleagues across the city. In this interview, maybe you'll also be as impressed as I am by Lisa's thoughtful responses and her enthusiasm for the work, no matter how hard it gets. Lisa sees no trade-off between growing investment returns for her clients by selecting portfolio companies that are meeting the needs of society within planetary boundaries. She's working for an investment shop that is a fundamental bottom-up active manager. Lisa has been a leader in helping also to create pathways for those who have not had privileged access to the investment field. Maybe she has helped you too. When I asked Lisa to go to the edge at the GreenFin 21 conference recently in the session on diversity, she did. She spoke frankly about her own journey and her good and bad experiences and the poor diversity in our investment industry in a way I'd never heard of at an investment event. In our conversation, you'll hear how Trillium uses a team of 5 in its advocacy and have engaged with 1,089 companies in the last year, including Alphabet in the 2021 proxy season, and which led to their proxy resolution being voted on around improved whistleblower protections after the drama at Google's artificial intelligence unit. Maybe you read about that. Lisa is happy to be the, quote, pesky investor asking questions, unquote, as she is an ally with internal changemakers who are looking to make ESG positive investment action happen on issues from diversity to waste management to Arctic drilling to not financing climate change. Lisa makes the case for systems level thinking in a way that investors need a functioning democracy to ensure better investment prospects. Listen in for all the experience that Lisa shares so generously with us. Celebrate also Lisa's career highlight. She helped a large family office with 3 generations working together, trying to shape their first ever sustainable investment strategy. A reminder, ESG and Coffee is not investment advice. Do your own research. Here is my interview with Lisa Hayles. She's one of the originals. I am pleased to welcome to the ESG and Coffee Podcast today, one of the originals making ESG positive investment happen, Lisa Hayles, investment manager at Trillium Asset Management. Please check the episode note for more. She's on Twitter at LMHayles, where she describes herself as expat Canadian in responsible finance, not an oxymoron, ! Views of my own. Good to know. And then on LinkedIn, she describes herself as enthusiastic, results-oriented, sustainable investment professional who brings 18 plus years of experience in advising institutional investors in the design and implementation of responsible investment strategies. Welcome, Lisa Hayles.
Thank you, Graham. It's great to be here.
It's lovely to have you. Where in the world are you today?
I am in beautiful Cambridge, Massachusetts, in Central Square. Kind
Excellent.
of between Harvard and MIT.
Are you worried about some snow showing up in April? Often that used to happen and kind of ruin the spring feeling in Boston.
You know, one of my closest friends is a big skier, so there are those amongst my friend group who are hoping, but I certainly hope we've seen the last of the snow, and it's looking good. It's been mild for several weeks, so.
Okay, yeah. Cross your fingers.
Fingers
And starting at the beginning, ESG and Coffee Podcast, we're meeting at your local coffee shop or cafe. What would I be ordering you from the counter?
I mean, I'm part of the OG in terms of coffee, not too fancy. I just like, I guess, what would be called an Americano in Europe, with a little bit of milk, not even cream.
All right.
And I also go for black in the summertime, like a nice black iced coffee.
Nice.
But yeah, nothing. I mean, I've had mochachinos, cappuccinos, etc. But that's what I have with me today, just a regular coffee in my Canadian mug.
Superb. Well, I just happened to grab my CNBC Africa special. This is at least a decade old. So there you go. Cheers to that.
Very nice.
Right. Let's flick on then. So at the beginning, we look back. Sir David Attenborough's superb Netflix documentary, Our Planet. Did you happen to see that? Have you seen that at all?
I have not seen it.
Okay, it's a good one. He references two significant data points which illustrate the exponential changes on our planet in his lifetime. So I've asked you as my guest, as I do every time, to check on three data points. And I'm going to ask you for each data point, you'll answer them, and then we'll compare. So in the year you earned your first career paycheck, which you do not have to tell us unless you choose to, roughly how much was each data point? World population.
I checked, it was 5.368 billion.
Wow. Okay. S&P 500?
The S&P 500 was at 417.9.
Wow. And carbon dioxide parts per million in the air?
357.23.
Man, happy days. Okay.
Yeah,
happy days. So for reference for our audience, today the population around 7.9 billion, S&P 500 3,889 odd. That's amazing compared to where we were. And then CO2 equivalent, it's just crossed, I saw this morning, just crossed over 417 parts per million, which is in dangerous territory, as we well know, and we'll talk about it in a bit more detail. So Lisa Hayles, how did it feel to look up those data points and compare?
Well, it made me think, God, I'm old. But secondly, and more importantly, it underlined the urgency of addressing the carbon crisis and, you know, the kind of intertwined crises that we have around income inequality, equity, environmental sustainability. So I was thinking about my optimism as a young graduate.
You that, right?
I am still optimistic.
Good.
I'm glad that I work in an, you know, kind of a part of our investment ecosystem, which is pushing hard to address these issues.
Absolutely. Reverend Desmond Tutu, Archbishop Desmond Tutu used to say, optimism can come and go in ways, what have you, but underlying it all is that hope. And I think that's part of our conversation and that we'll have today. So let's flick forward then to some fast questions. Are you ready for a quick espresso shot, 5-question set?
I am.
All right, here we go. What is your earliest memory of investing?
I can remember So in Canada, where I grew up,
Mhm.
Canadian children used to get what was called a baby bonus, or parents used to get a baby bonus, like a payment.
wow.
And my parents allowed me or they invested that money in savings bonds. So that's what I remember as a child,
Wow.
investing in Canada savings bonds.
Okay.
Some of the money that my parents put aside, or rather the Canadian government actually
Right.
paid to parents for their children.
And was it in like a little paper document, or how did you?
Well, no, my parents established a bank account for me,
Okay.
and I did. Yes, we did get actual. These were when you actually got
Right.
paper certificates,
Yes.
which were kept in I think a safety deposit box
Right.
at the bank.
Right.
Right. So once a year, you'd get to go.
There
And
you go.
yeah,
Okay, great.
yeah,
That's wonderful. Right.
yeah.
What is your philosophy of investing in one sentence?
First, do no harm.
Ah, nice. What switched you on to ESG?
Volunteering as an undergraduate for both Amnesty International and Oxfam.
Huh. Yep, that'll do it.
So and my first job out of college was working for a microfinance
Okay.
NGO.
Okay.
And so I spent a lot of my career working at what I call the intersection of kind of social justice concerns and private
Mhm.
enterprise.
Mhm.
So I think those things can be held together.
Yeah.
And I'm glad that I've frankly been able to build a career that has allowed me to bring those two sides of my interests together.
Yeah, wonderful, wonderful. And it's true, it is a building that you've had to do. Yeah. Okay, next question. How do you choose to define sustainable investment or responsible investment or investing with ESG factors in less than 30 words?
Ugh, I hate that question. Sustainable investing is investing that seeks to consider all factors relevant to the long-term performance of companies in an investment portfolio. Simply.
That's pretty good. Yeah, I'd bank that. And last question, our first set of 5 is special question. What is your biggest investing mistake so far?
Not buying Apple when I had the chance back in the early 90s.
Yeah. Unfortunately, mine's much more recent. I bought the vehicle, not the stock of Tesla, and I love my vehicle, but should have bought the stock. Yeah.
Indeed.
I feel the pain. Yeah.
Indeed.
Okay, great. So let's go into our first of 3 deep dives then. And each of these we kind of unpacking as much as we can, different aspects of your role, and then you're sharp at Trillium Asset Management. So opening with question 1 then, just to situate you for the audience, the investment value chain got many parts to it, those that gather assets, those that implement the investment strategies, those that shape or develop the products that are involved, those that do the research, those that actually engage with the companies. So which piece on this investment value chain are you, Lisa, and what role does your shop play and not play?
Yeah. So I am a gatherer of assets, essentially. So I sit as part of the private client team at Trillium. So I'm working with high net worth families, often multi-generational, as well as foundations, endowments, et cetera. And our typical clients are between, say, 5 and 25 million in assets, though there are some significantly larger than that clients amongst our client base. But Trillium as a firm is also a manufacturer of strategies. So we offer 7 strategies, mostly in the US space, US large cap, small and mid cap. We have a sustainable opportunity strategy. We also have a global equity strategy, which invests both in the US and internationally. And so for our clients, we have what we call a quasi-open architecture, because I build portfolios across asset classes, equities, fixed income, community investments, and we also have a private equity fund of funds, which is only for Trillium clients. So that's not something we sell outside of the Trillium client base. And so for clients, I'm building portfolio. We also do manager research on external managers for some of the asset allocations that we fill on behalf of our clients. So.
That's very, very helpful. And you get bonus points for using the word investment manufacturer. I think you're the first in season 1 to use that. Also, you get triple bonus points for inviting some birds outside your window. And that bird song is a gift to this interview. And
I was thinking my window is open because
no, it's
it can't be,
beautiful. Yeah,
is it?
yeah.
I'm very fortunate to have a number of very happy birds right outside.
That's a positive externality. Unfortunately, we have to deal with a lot of the negatives. Let's keep the positive. Yeah.
Let's keep the
Good
positive.
man. All right. And then a simple question. How does one buy your investment or finance product and service? Where does one go to buy it, and how do you buy it?
Yeah, so private clients often come to us directly or sometimes through advisors. We have an institutional part of our business that works with investment consultants. But if you're a retail client, there's probably one of two ways. You may visit our website and like download forms. There's actually a section that's on the makes documents available on the mutual fund. Or more likely, you might work through a broker dealer.
Right.
So our strategies are available through models through a number of broker dealer platforms. So you may access this that way as well.
And so would you buy it through your 401k or 403b through your retirement plan? Or
there aren't very many of our strategies available that way. People do hold our strategies in their IRAs, and that's very, very common.
Okay.
Yeah, that's the most common way. We're not, though that may change. I will just hasten to add that you may, or I'm not sure if we're going to talk about this later, but Trillium was acquired by a larger financial services firm called Perpetual last summer. And Perpetual committed to us maintaining our focus on ESG investing, is going to be providing and has already started to build out marketing and distribution for us. So they see ESG as an enormous growth area, and they're freeing up our time to focus kind of on clients and on the creation of our strategies, whereas they can push the marketing and distribution. And so that team will be responsible for, trying to get on retirement platforms, for example.
Got it. And then I wasn't going to cover this, but because we are talking about the distribution piece and how do you buy it. So are any of your strategies yet in an ETF structure? Is that something you're exploring, or it doesn't fit your strategy?
No. As far as I'm aware, no. I mean, Trillium is a bottom-up fundamental stock picking shop, active managers, active management. So as far as I'm aware, no.
Got it. Okay, good. So then let's move on to kind of how Trillium tells their story. And my open-ended question, you have a motto or a strap line that you find yourselves always using, or it's on your website or on Twitter, so on and so on. So what is the Trillium one-liner that kind of pitches Trillium to the world?
So we say Trillium we are seeking to provide for our clients financial well-being and to make a positive impact through their investments. Period. And I guess what I would go on to say is that we don't see any contradiction in those two objectives. It's often, it's often in the past been presented as an either or. So for us, it isn't an either or. It's an absolutely necessity to do both.
Yeah, good. Okay, great. So moving on then in terms of deep dive in section 1. So the big themes for 2021, the many themes. I've seen a lot of work, and we're seeing through the proxy season around climate change, around racial tensions and equity and inclusion. So those seem to be two big themes I'm seeing across a lot of the annual general meeting activity in proxy season for 2021. I did look at your form ADV that you posted for 2021. It talks a bit about areas that you're not in and areas where you look to avoid companies. One of my favorite sentences, just because it just reads well, is we avoid investing in the hard rock mining or nuclear power industries. And I was just so dying for someone to do a type error and leave out the mining part. That kind of questions you had back, oh, we don't do hard rock or nuclear power. It's like, what?
That's right. It's not us.
So I'm just having fun there. But in terms of your big themes for 2021, what are they?
Yeah, so I think on the investment side, we've actually been talking a lot about resilience across the board and
What
how
do you mean
we
by that? Yeah.
will try and explain what we've seen for the past more than 40 years is a kind of shrinking of the government,
Right.
an outsourcing approach that sees like the squeezing of every last cent out of every process is the kind of goal and the objective. And that leaves systems, communities completely vulnerable to disruptions. And I think what we've seen with COVID has been the culmination of what happens when you extract from systems until they reach their breaking point.
Right.
And we talked about this actually in our quarterly update, or rather my colleague Cheryl Smith, who's our kind of chief strategist and economist, and provides the kind of macro view for Trillium strategies. There's been this completely kind of shrinking of the government, and at the same time this outsourcing, restricting of or squeezing of companies, manufacturing, supply chain, extraction processes. And so our view is this, what happens with these types of trends is that they go so far, they overextend, and then there's a pullback. And we're now in the midst of the start of the pullback with things like the announcement of the American Rescue Plan, the planned infrastructure. Who knows if that will actually pass in the form that it's proposed.
Infrastructure week yet? I'm just checking.
But, we see, and our portfolios essentially have been positioned with the view that resilience is an incredibly important part of ensuring that companies and the portfolios themselves will perform well over time. So we've tried to favor those companies that have, in our view, kind of built in a sense of the importance of treating their employees well, having a supply chain that has proper oversight, et cetera. And where, there's no perfect company, there's no perfect investment, used our voice to influence companies in a direction that we think is in their long-term best interest, to pay attention to these issues. So resilience kind of cuts across multiple issues, multiple poles. Climate change, for sure, remains a huge focus for us. I mean, our core strategy is fossil fuel free, but climate change is relevant across all sectors. And so we're interested in understanding bank financing and reducing energy use throughout the supply chain and doing, providing us as investors with more information on greenhouse gas emissions that are based around the science-based targets. So all those dimensions are a significant part of what we're doing. And then a third focus is actually on racial justice, not surprisingly. So our investment team, our fundamental analysts have undertaken a racial equity survey of every single company in our portfolio over the past year. Yes. Really? So we have been discussing, I sit, as well as all my colleagues, sit in on our investment management committee meetings, which are weekly, and we've been hearing the results of those that survey work, which is really to understand the kind of, it's a benchmarking exercise, like where are you now? And the next step is really for the fundamental analysts to be thinking about how is this going to play into our analysis and our kind of, we do an internal ranking, benchmarking of companies and across sectors. And so that racial equity research will feed into the benchmarking process that is undertaken in 2021 into 2022.
I really like that primary research. I really like that they're kind of rolling up their sleeves and getting that information.
I mean, that is one of the ways, or one of the things I think that really sets Trillium apart. There are many firms that have, ESG products and ESG overlay. So not only has Trillium been integrating the consideration of ESG issues or since inception, but unlike many firms, we do not have, our fundamental equity analysts are responsible for the ESG analysis. We do have 2 ESG specialists who support the fundamental analysis work, and they're often most relevant where we do the sector benchmarking on an ESG basis. So they're coming in to kind of identify what issues matter in the sector and how companies are performing compared to their peers. But our fundamental equity analysts are asking questions around ESG performance. They ask the questions around racial equity, followed up with investor relations. And I think it changes the dynamic and the discussion when the equity analysts are asking these questions.
Yeah, absolutely. And there's a piece, so that makes me jump over then to, there's a piece I was going to ask around how the shop looks at ESG risks and opportunities. And there's a piece in the Form ADV that says, Trillium evaluates and scores companies on their ESG performance, which our analysts use to determine the companies available in our universe and the companies we wish to include in our buy list. So is that primary survey happening with, I guess it's already happening with what's in your buy list. So they've already.
Absolutely. The racial equity survey was focused on companies which were already in our buy list. So companies which are already eligible for inclusion in and that actually is around 200 companies across all of our strategies.
Well, that's not small. I mean, how long does that take?
So this research started in the fall.
Okay.
I was incredibly impressed with the tenacity of the equity analysts pursuing this focus. And I do credit our Chief Investment Officer, John Quayle, for really articulating how important we believe this. He's said unequivocally, this is an area that we do not feel we've paid enough attention to in the past. We are going to bring resources to bear on this. We want to think about, in a careful, systematic way, how these issues are playing out in the companies in our portfolio and how they may do so in the future. And, all of our investment analysts, they are very, every single one of them has a CFA. They are all conventionally trained, if you like.
Yeah.
And they also are incredibly motivated to understand and really dig into issues that go beyond what can simply be, because a lot of these things, we don't believe, for example, that we're necessarily going to come up with a number. Like, here's the racial equity score that's going to feed into our model. That's not exactly how we believe it will, will sort out. But we do think this information is highly relevant. And the fact that the analysts have embraced this process is really, I know, it's like, as a relative newcomer to Trillium, I've been impressed with that. We've actually been getting the reports on. We've had reports by sector, so we've basically been hearing the feedback that the analysts have collected over the past kind of 3 weeks, essentially. So it's essentially fresh off the presses.
Wonderful.
This won't be published in summary probably until the spring of next year.
Okay.
As we work out kind of how which of the indicators we've selected might actually feed into a benchmarking process across sectors. But you're hearing it here first.
Yeah, wonderful. Well, thank you so much for trusting the podcast with that. And my instant reflection is, this is part of the differentiation strategy that you're able to deliver as a smaller shop. You're not some megalith investor. Also, you're active managers, not passive. So I can see how it makes a lot of sense. But even intellectually, I hope, so my encouragement to you in the shop would be, can you find a way at the time with their appropriate level of detail to feed this into the public discussion, either in the Boston universe, which is rich in itself intellectually, but also broadly to say in the CFA Institute, because I know they're keen to investigate, and then just broadly into the space. I think anything that is research led and kind of thoughtful analysis, but looking also at the mechanics of how do you make investment decisions, I think that would add to the body of knowledge.
Yeah, no, I think we're definitely interested in doing that and want to. I mean, Trillium has been a leader in ESG has been an ESG thought leader for decades. And anyone who visits our website, there is a huge area of, there's a huge resource page and white papers on different ESG themes and talking about total portfolio activation. So we believe that part of our mission is to promulgate some of the work that we have been doing. So I think you'll definitely see something. I'm not exactly sure when, because there's a lot of work that we're doing internally on this
I appreciate
work.
that.
But yeah, no, I agree with you that it should be shared and should be, we'd like to influence as a wide a number of investors as we can. Our goal is to bring investors along to invest more like we do.
That would be good. That would be very good. Very good. Okay, so let's round out deep dive part one with, let me pick this question. I've got one more question, then we'll close part one of three. So carbon footprint analysis, you referenced earlier, it's one of the themes for the year. It's in the industry. There's a lot of focus, of course. One quick question, and this is partly relates to something I've seen from an asset allocator due diligence questionnaire. So how do you and your firm conduct carbon footprinting, temperature mapping, if you do, and or climate scenarios modeling analysis in your portfolios?
So we do carbon footprinting, and we've published for each strategy since 2016, a carbon footprint analysis using data from external vendors. So we've just switched vendors. I'm not sure if I could say that because I'm not sure what this state of. So we had an internal briefing very recently on a kind of new approach to carbon metrics because our ESG analysts had found data that they thought was more comprehensive.
Interesting.
So they're constantly reviewing third-party data in order to understand. And that is, for something like that, we are, we're not collecting primary data on greenhouse gas emissions from each of the companies in our portfolio. We do, and partially because this is something that we've seen requests from investment consultants and also from clients just about how does your portfolio compare to the benchmark? How do you compare to other investment managers in terms of the carbon, the carbon intensity of your portfolio? So those types of questions are more common, I would say, in the last 3 to 5 years than they ever, we didn't hear those questions before. And so our response has been to try and provide some standardized data, quantitative, both. So we do impact reports on a strategy basis and also for our firm overall. And on a strategy basis, so we're reporting on kind of the carbon footprint of the portfolio, the carbon intensity, also some metrics around shareholder engagement, et cetera, on the kind of the impact that we're having side, which we can talk about later. We don't really do scenario analysis other than, I think in broad terms, we have a belief as a firm that we are shifting towards a lower carbon economy. We are trying to favor those firms which are positioned across sectors to take advantage of that shift. And we're also advocating for a regulatory environment that supports a more rapid transition to that shift. So we are. And that's often in conjunction with some of our clients. We work with environmental NGOs. The Sierra Club Foundation is one of our clients, for example. We work with the Environmental League of Massachusetts. So there are a number of environmental organizations where we've actually testified alongside them at the State House, for example, around things like divestment from fossil fuels, which was that was a huge issue in Massachusetts because a local, you might know this, the city of Somerville did divest and then was told by the state that they were not allowed to do that. So we participated in order to say, hey, you could build a fossil fuel free portfolio that is completely consistent with your fiduciary duty and performs in a very similar way to a portfolio, or even better, a portfolio that may have fossil fuels.
Good. Thank you. So then let me add section 1 with a detailed question, and that is, if we look at a key performance indicator, and I'm having more and more of these conversations, and it tells me a lot based on how people answer or what the numbers are. So what price for CO2 equivalent per ton does your firm use internally for your own operations? And what price for CO2 equivalent per ton is in your portfolios? How would you answer that?
So I discussed this with a couple of our portfolio managers and analysts yesterday, and they said, well, we don't really use a price. So I'm sorry that I'm not able to answer that in a succinct, like, this is the price that we use. Okay. We do offset, our travel and, our operations. So I imagine if I talk to our offset provider, I would be able to find out the price that they are offsetting, our internal operations at.
I'd be happy to. So, if based on the answer that you get, we've got time in the edit. So, if you want to send me anything like which vendor you're using or something, we can include in the show notes.
You are listening to the ESG and Coffee Podcast, hosted by Graham Sinclair.
Vous participez au podcast ESG and Coffee, offert par Graham Sinclair.
Okay, great. So let's take a breather, grab a sip of coffee while we reboot. So let's go with now 5 fast espresso shot questions. This is our second set of 5. Lisa Hayles, are you ready?
I am.
Here we go. What app are you, Lisa, most likely to be viewing on your smartphone while waiting in line?
Sadly, Twitter.
That's great. I found a journalist today at Bloomberg who doesn't have Twitter. I'm still in shock. What book did you enjoy reading recently?
Mexican Gothic, which is a book by an author named Isabel Toledo. I'm actually in a book club, and so that was a book club read. And it's a bit of a horror, a Gothic horror. So it's creepy, very different from what I would normally read. But I love to travel, and I think part of the appeal during this lockdown period was to the book is set in Mexico, so it's kind of interesting to read about, very evocative of a particular time and place. So I enjoyed that.
Yeah, good call. Yeah, and not my genre, but good call on travel. What is the best kind of pie?
Cherry pie.
Oh, nice. Do you have a favorite farm or brand or something? Like, where do you get cherry pie?
I don't really have I mean, it's definitely like a farmer's market favorite. So there are a few farmer's markets but no, I don't have a favorite brand. I have one of my good friends in Toronto makes cherry pie. So
wow. Okay. Well,
my favorite would be Diana's cherry pie if I had my druthers.
There you go. Well, if she does online deliveries, we'll drop in the show.
I'll have to ask. What
is your favorite movie or on-screen moment that relates to the world of investing?
My goodness, I thought about this a little bit, and it's Margot Robbie in is it in The Big Short? There's a scene where she explains
it. Yeah, is that the bubble bath scene?
Yes, the bubble bath scene, which I think is just so well done on so many levels.
Okay. Very nice.
So I love that.
We'll find that clip and drop that in. Good. Yeah. And then finally, of these 5, as an investment professional, what was your most meaningful success so far? You will have many more, we know, but so far, what would you call your most meaningful success?
My most meaningful success, I think probably it's working with a very large family office to help them build out a sustainable investment strategy. That was prior to my current role, but it was a very large family office, and they're still evolving. They're at the beginning of their journey. But, it's one of these things where the third generation or the next generation is influencing the older family members, and I think that next generation also influences other young inheritors. So it's all about the ripple effect of trying to get more and more folks to think about how they can bring an impact orientation to their investments.
Wonderful. That you must hold on to that. That's very cool. Yeah, well done. Good. Okay, deep dive part 2. I'm mindful of our time here, so I'm just going to keep us moving along a little bit. So deep dive part 2, looking at risk, sell discipline. One of my favorite things lately is I've looked at form ADVs, as you would assume I would as a ESG architect and preparing for the interviews. And form ADV has a certain layout on risk and so on. So it has your people who kind of reporting in say there's a variety of market, currency, economic, political, and business risks, and ... And then quoting from your form ADV submission at Trillium, ESG policies could cause an account to perform differently compared to similar portfolios that do not have such policies. The application of ESG standards may affect a portfolio's exposure to certain issuers, industry sectors, factors that may impact the relative financial performance of the portfolio positively or negatively, depending on the investment. So just briefly, I mean, have you noticed that the form ADV doesn't use the word climate and doesn't have the phrase environment, social governance risks in it?
I had not noted that.
No.
Yeah. But obviously we think, well, I think we're in a new era right now. We see the SEC appointing a senior professional for ESG issues, that they've invited submissions specifically on climate disclosure, and who knows, I mean, I think we're in an environment with a federal government that's much more sympathetic to requests for disclosure and increased transparency on the part of issuers. So maybe we'll see different guidance. I'm wondering if there's some specific guidance around the form. I don't know from a legal standpoint. That's something I would want to check with our head of compliance. But I imagine that there are, our head of compliance, who I did talk to before this, because there were a few things I'm like, can I say that?
Yes, we're not getting, this podcast must be interesting, can't get you fired. That's my topic.
Exactly. So I don't know if there are specific legal or kind of compliance reasons we haven't made reference to those specific terms, but I also recognize that we're in a different, hopefully, paradigm, and that I expect a shift in how we talk about things and how we're permitted to talk about things going forward.
Yeah, so, I think frankly, and something that carries weight to whatever audience I'm talking to, I just pull out Larry Fink's quote from 2018 January, and his quote, "Climate risk is investment risk." Bam, there it is. It's just like it's over, right? And ever since then, it's just been a matter of time and kind of updating text and so on. Okay, so another key piece I want to unpack. The sell discipline. When do you choose to sell stocks? We're going to pick up in our third deep dive around engagement and proxy voting. So this is more just like in the portfolios. So and it's the hardest thing because emotions get wrapped up in what professionals do. We're human after all, and investment shops try their best to be very disciplined. So how would you describe your sell discipline, and where and how do ESG issues trigger that sell discipline?
So what I would say is that our sell discipline is governed both by the portfolio strategy and by stock-specific analysis. So there's, we're balancing like the overall portfolio versus what's going on in the individual stocks.
Right.
So you can sell the securities because, our investment thesis just didn't pan out the way we hoped or as we thought, right?
Okay.
The market, can outlast any particular.
Yes.
The irrationality of the market can outlast any particular investment, i.e. GameStop, which we would never own and don't own. And there's negative changes in a sector, in a company, a material deterioration in ESG characteristics, and we definitely do sell based on that. And then there's excessive, like we take profits, like this has run up enormously, and it's just, we are getting a little bit uncomfortable and with the valuation, and so we trim it back, even though, and we trim it back. So I think all of those things can occur both in isolation, and more oftentimes they influence one another. Like there's, and you're right, it's both art and science. Yes. So there's, that's why our investment teams, our portfolio managers, or rather each of our strategies has a portfolio management team with a lead portfolio manager. Typically, they come to consensus on, additions, deletions, etc. But the lead portfolio manager does have the final say if there's disagreement. So it will be their decision about, selling out of a name.
Got it.
Completely.
So linked to that, and that ties to talking about the sell discipline, and then earlier your less than 30-word description on sustainable investment, which is long term. Yeah. So often we say in our theme of investing is we're looking for long term investments. We're looking to improve things over the long term for all stakeholders as well as shareholders. So portfolio turnover is a key piece of that. From your form ADV in 2021, it says, quote, "Our aim is to keep portfolio turnover to roughly 20 to 40% per year," unquote. And I know other portfolios that are turning over 100% and so could you just unpack just in a minute or two, what is the approach to portfolio turnover?
Yeah, so we are long-term investors, which means we typically when we identify a name, we are likely going to invest over, we have a thesis that plays out over 3 to 5 years. And we don't expect, barring unforeseen events, which happen all the time, right, that we're going to be trading in and out of the name. And therefore, I think in our core fossil fuel free strategy, for example, the portfolio turnover is under 25% for this past year. That is about the average that it's had. A couple of our strategies, so sustainable opportunities, for example, has a slightly higher turnover. It's a more concentrated portfolio as well. So that kind of reflects, it has bigger exposures to the names in the portfolio and a kind of a narrower band of names that it has exposure to. So you might, it's not that surprising that the portfolio turn is a little bit higher. But we are, we're not traders. We're not chasing, we're trying to ignore the noise to the extent that we can. Right. We had a hilarious discussion just this past week where one of our PMs, her son, who is he's about 20, I think. Her son was like, "Mom, why don't you, I could beat you in terms of, because I'm on Reddit and I'm following, all this analysis you're doing is." I'm not sure he said pointless, but he was basically like, "Hey, I got this." And the more senior members of the team rolled their eyes and said, "Well, the apocalypse is nigh when the kids and everybody and their uncle is crowing about their, ability to
driver and
So that is the kind of thing we're trying to. Right. Though obviously, the market, and particularly like in late January, was completely frothy and unrelated to any fundamentals whatsoever. And so it's a difficult for a shop like ourselves, we're just trying to navigate the eddies of that type of market while sticking to our knitting. As it's a cliche, but that is what we're trying to do. We have a belief around those elements that make for good stock. Like, what is a good stock for us? It's a stock that has financial integrity. We're evaluating the financial integrity. We want low leverage, and we want earnings, and the typical GARP, right, at a reasonable price.
Got it.
We're willing to pay a little bit more, maybe, but we are, so we're core with a growthy tilt, is I think how we would describe ourselves. We're not putting words in the mouths of our portfolio.
Trademark, yes, I like that. That needs to be on a T-shirt somewhere, all right?
Yes.
So one more piece on ESG, then coming to land with my last question for deep dive part 2. So, as you said, no companies are perfect and no investments are perfect, right? You will hold names, and some of the ESG parts of the ESG performance is good. Some of that ESG performance is less good / disappointing. So how does your shop, and maybe with those 2 ESG specialists you described in the investment committee on each strategy, how do they make a decision on those trade-offs?
So we do have a small set of negative screens, which just are exclusionary, right? So there's sectors we don't invest in. There's certain companies we just don't meet our standards.
Right.
On the positive side, it's always a relative game within each sector.
Right.
So we're looking to compare companies to their peers to understand how they manage their risks and opportunities, where they may have advantages that we think are they can sustain over the long term. And that is combined with the financial analysis. So there is, again, it's art and science. There's not, I'm trying to think of how to describe the weighing of these issues is really, so the analyst makes a recommendation based on their, write-up of the company, weighing both the financial and the ESG perspectives. That's discussed at the investment management committee level. We all can weigh in, so including members of my team, we attend those meetings. We are feeding back things that we've heard and read. Some of our clients are very knowledgeable about specific ESG issues, so we can share their perspective, kind of what are you hearing about this issue, as well as what comes from what the analysts themselves present. And then, it's a bit of a challenge session where, other analysts and the portfolio managers are really like, what about this? What about that? Is this really, is this compelling? Yeah. So, any new stock is running the gauntlet in that sense, and really getting the once over from a huge range of viewpoints before it makes it onto our buy list. Yeah. So we need to feel pretty comfortable. And I guess on the flip side, there are names that were previously on the buy. Well, a great example, I think I could talk about Amazon. It's not on our buy list. It's never been on our buy list. We're not comfortable with the labor issues at that company, despite the fact, our tech analyst, bless him, he totally understands why it's not an appropriate stock for our portfolios. But, he could argue from his point of view, like, it's a big hole. Right. If you don't have exposure to that name,
you find them staring off into the Boston Harbor view distance like every afternoon, right?
That's right. But they have actually been able to build to compensate for a lack of exposure to that name and some other names that we don't typically own, and successfully navigate that. So it's a credit to the analysts and to the portfolio managers that they've been able to do that. And I guess we would argue, our performance may deviate over the short term. We think over the long term, we will outperform. And we are able to get there following a slightly different path, perhaps. But that is consistent with what we believe is likely to be more robust long-term performance.
Good. Okay. Then coming into land with section 2, related to that in a way, greenwashing, right? So quick question. Do you agree greenwashing is real, and how does it hurt the work that you do?
I think greenwashing is real if I understand it to be a set of claims about an approach or companies themselves that are not actually consistent with what is in the approach. So there's a kind of a gap between what is said and what actually exists. But I would actually argue, and I only heard this term relatively recently, that green wishing is the bigger danger.
Okay.
And I heard this term from Raj Thamortharam.
Oh, yeah. Oh,
Raj.
Oh, yeah.
Who is a wonderful thinker.
He's one of the originals. Yeah.
Yeah, definitely. So you must ask him about that. So he was quoting someone else who wrote a paper on green wish.
Okay.
And essentially this idea that by, kind of these small changes at the edges, we can solve climate change.
Yeah.
We can address these deep intransigent types of problems. And essentially this paper and Raj's article was arguing there is some need for policy change, for regulatory involvement in order to address these issues. Voluntary initiatives won't get us all the way there, which I 100% agree with.
I think that's fair. For me, it reminds me of, there's a great podcast, Alec Baldwin does a podcast called Here's the Thing, and he interviewed two humans who run sanitation in New York City,
Yeah.
and they were talking about aspirational recycling. And that is when you kind of hope it's recyclable and you just put it in the recycling bin, and the person, on the other end is like, come on, dude. It's like an umbrella or something. It's like, we're not recycling your umbrella. Okay. So, yeah. So I see how greenwashing could be that.
Yeah.
Okay.
You're listening to the ESG and Coffee Podcast, hosted by Graham Sinclair. Sie hören den ESG and Coffee Podcast. Ihr Gastgeber ist Graham Sinclair.
Grab another sip of your coffee. We're going to shoot through with section 3, or our third set of our 5 fast espresso questions.
Wow.
Ready, Lisa?
Ready.
All right, good. You're looking good. You're doing well. This is fun. We should do this more often. Do you have a favorite type of tree, and what is it?
I don't have a favorite type of tree, but I thought I do like bamboo a lot, which I'm not sure if qualifies as a tree.
That's true. It's a type of grass, I think.
It's a grass, but I quite like bamboo. So
that's you. That's yours. All right, good. And there is space in your backdrop. We'll tell room rater, just hold off on your rating because you're going to get a bamboo plant on the corner there. Good. What one book on investing would you recommend?
So this is a book more on economics and maybe sociology.
Okay.
It's called The End of Slavery, and it's by a Wall Street Journal reporter named Doug Blackman.
Okay.
Douglas Blackman, which I picked up in the fall.
Okay.
And it really, it's a book about how in the aftermath of the legal end of slavery,
yes,
the economy of the southern United States morphed to essentially reestablish it. And that slavery de jure, as well as de facto, didn't really end until after the Second World War.
Wow.
So it's not really an investing book per se, but it's something around the history and the economics of the United States. It was very eye-opening to me. And I think it's really helpful in understanding kind of where we are today. It's one of these, you can't really understand where we are today without having an understanding of history and how it impacts where we are. So
The End of Slavery. Okay, thank you. We'll put that in the show notes. Side note on that, there was just recently a BBC series, 3-part series on Scotland. And how people in Scotland benefited from slavery. And it's also one of the, like, someone found some old papers and they explored it. And it's until you ask hard questions and you go and do fresh research, and then you don't really know. And then when you know, you need to update your thinking. So
that's right.
We'll include that in the show notes. Thank you. How is your own retirement fund invested?
It's invested in my in various Trillium strategies. And in fact, both my 401k and I have a separate IRA are invested. So I have very little fixed income.
Okay.
I think instead of fixed income exposure, I invested in a target date fund. So I'm kind of higher up, maybe on the risk appetite. Okay. But fixed income isn't returning much right now or the foreseeable future. So yes.
And we're all going to work till we're 100 anyway because of so that.
So can definitely ride out the next downturn.
Yeah. What would your advice be to Lisa, age 17 years old today?
Don't drop calculus.
Noted. I think noted. Yeah.
Yeah.
What is your advice to people seeking to enter the field of ESG investment and finance tomorrow?
So I get a lot of requests from students and career changers for advice, and I think it's been particularly hard during the pandemic because the normal venues and places where you might be able to network have not been available. It is about networking and educating yourself. I would encourage those who are interested to take advantage of some of the free resources available, like BASIC, building a
That's
sustainable.
the Boston area sustainable investment.
Well, they rebranded themselves as Building a Sustainable Investment Community a few years ago.
Oh, okay.
Yeah, because they have a chapter in New York now, and I think they have a chapter in San Francisco, if I'm not mistaken. There's also another group for young women, kind of young to mid-career women, called WISE, Women Investing in a Sustainable Economy.
Right. Okay, good.
There are a couple of different kind of educational online. There's the Sustainable Professional Investment Certificate, SPIC, I think.
Yes.
Available through Concordia University in Montreal. PRI is offering training as well. I think it's worthwhile, and kind of exploring that.
Right.
Yeah. So I guess my first recommendation is there are lots of online resources.
Right.
Figure out where they are. I speak a lot to like student groups or as a guest lecturer, and I'm always happy. Though I have less and less time to do it, to offer students kind of a half an hour of like a time. I for a while I tried to book like half an hour every other week as my like office hour, where if there was a student who wanted to pick my brains, that is increasingly diminishing because there's just. I don't know if you find this, Graham, but I find even though I'm at home and in theory have more time because I don't have to commute.
Right.
I get to it's 6:30 and I'm like, I am not finished yet. I still have things to do.
Right. That email that you're going to knock out before 10 is still right there.
So, so I guess the short answer to that is take advantage of the listservs, the networks. There's so many more programs on ESG investing than there ever were, lectures. Right. And hopefully once the economy opens up again after we all are vaccinated, there will be opportunities to get together, network, learn, connect.
Excellent. Good. And you can point them to this podcast because now you don't have to share that message.
I can.
Excellent.
Listen to Graham's podcast is another.
We covered this. We covered this. All right, deep dive part 3, and then we'll come into land. Some more detail. Could you talk a bit on the performance of the various strategies, just the cash performance and or the ESG performance? Not too heavy a deep dive. People can go online and check it out for themselves, but maybe something that's not on the page.
Yeah. So what I will say as a caveat first off is that advertising is verboten for Trillium because we have mutual funds, and I invite anyone who's interested in the financial performance to check out the fact sheets, which are available on the website. But I really like the question about impact performance. So we have, as I mentioned earlier, published impact reports on a strategy basis as well as a firm-wide basis for the last, I think we're now in the 5th year of doing that. And so we track things like the number of companies. We've engaged over 1,000 companies over the past year.
That's a lot.
Yeah, 1,089. We have a 5-person advocacy team.
Wow.
That's separate from ESG research. So 5 full-time people dedicated to advocacy. I think it might be one of the biggest teams, if not the biggest teams in the United States that's wholly dedicated to advocacy. And so we are engaging companies in our portfolio on multiple issues. So and what we found is that, you build relationships over time, you build a trust relationship, you bring other investors into the discussion. We're using all the tools at our disposal.
Okay.
So the proxy process, including and dialogue, including filing shareholder resolutions. But oftentimes we're withdrawing. I think we file typically 24 annually, and we probably withdraw half of those typically in a year. And that's as a result of a negotiated agreement that we have reached.
So I'll unpack that a bit. I want to cover it later. Let's cover it now. So because to many people, they've got, a lot of people talk about this, but very few people kind of unpack. So what happens exactly? How awkward or stunted is that conversation? And partly this reminds me of when I was first started teaching in 2007 to MBAs at University of North Carolina, Chapel Hill, Keenan Flagler Business School. I would have the Harvard Business School case study, Norway sells Walmart was the title of the case. And really the protagonist, the knot, was simply around the Norwegian Sovereign Wealth Fund sent requests for information to Arkansas, and somehow they just fudged that and they never got back to them. And then they got very upset and it became like an international incident when suddenly Walmart was sold by the Norwegian Sovereign Wealth Fund. So many people don't understand just the basics of how do these conversations happen and what goes forward to become a proxy resolution and what gets pulled back.
Okay. So I would start off by saying that we, on an annual basis, are determining kind of the themes of our focus for engagement. Climate change has always been and likely always will be a very significant aspect. It manifests in different ways because in addition to the things I talked about, science-based targets and disclosure, we're looking at how and where climate change is impacting companies outside of the kind of production area. So financing is a big area that we've been focusing on, financing of climate intensive activities. So maybe a great example of a recent engagement is with Bank of America around financing of Arctic drilling. So we've had ongoing discussions with Bank of America for several years, encouraging them to adopt more detailed ESG guidelines around their lending and underwriting activity. We've been part of initiatives like the Carbon 100 Plus initiative, engaging with companies around supply chain issues and in terms of banks around criteria around lending and underwriting. So Bank of America, and we brought together a coalition of investors around that issue. And initially the discussions, though, respectful and I don't want to say they were useful, but we reached an impasse in terms of the bank being able to get to the point of agreeing to a moratorium on financing of Arctic drilling. And so we filed a shareholder resolution. And in the fall of 2020, in fact, in December, we were able to announce that the company we withdrew our proposal because the company agreed to cease all funding of new drilling and exploration in the Arctic. And I think, the dialogue it's based on so we are long-term holders of the stock. We were able to bring together a large coalition of investors, including some very large pension plans, which hold the stock. This is a huge company, which is widely held. And so likely most investors hold some Bank of America stock if they have exposure to large cap companies in the US. So there's the long-term relationship, there's the expertise that we have built on the topic, the relationships that we have within the company, within the investor community, within community groups on the ground. So we're kind of serving as the apex of a bunch of different, or maybe the middle of a bunch of overlapping concentric circles, bringing the investor voice, the investor argument to the table. So we're open and listening to activists. We're open and listening to the company. We are investors, and we're driving through the view of investors. We completely believe our fiduciary duty requires us to raise these issues, and it's in the company's long-term interest to address these issues, period. So,
so was that conversation with head of sustainability, head of financing, with investor relations, like who did you meet with, or who were you trying to engage to change the company?
So I was not involved in that engagement, so I cannot say 100%, and I can certainly come back to you with details of whom we met with specifically. I think there's a bit of both, and it's investor relations and the sustainability people. They have a significant, ESG team internally now that we have relationships with and have built relationships with over time. In the past, I've often heard some of the work that we do as engagement professionals to be akin to kind of working with folks, we're allying with folks internally who are making the case about these pesky investors who keep on asking for these reports and this disclosure, and I jokingly say, if you need us to be the bad guy, please, by all means, make us the bad guy. Yeah. But there's also the attitude that, to your point about Larry Fink, there is an increasing recognition from the absolute top echelons of firms that these issues are significant, cannot be ignored. And there has to be a robust, thoughtful response, that it's not simply, so often it's about, maybe we have disagreements about the timing of how quickly companies can move in this direction, the kind of comprehensiveness of what they can do, so we're always going to push on, like, can you do a bit more? Right. Can you commit to this? Maybe not this year, but, next year, or what, over what time frame can we see, some reporting, some improvement in performance on this. And frankly, sometimes companies surprise us. Like, I had an example of Starbucks, which has committed to reducing its plastics waste by 50% by 2030. Really? I mean, that's 10 years away. Yeah. They're going to have to reformulate their, I actually had I'm pretty sure that's what.
I know they've been working on that new cup with the team at Closed Loop Partners, for example.
Yes. Somewhere I have here. Let me see if I have. Yeah. They have committed to reducing waste sent to landfill, by 50% by 2030, including plastic. So it's actually waste, solid waste. Yeah. But that will involve completely retooling how they collect and manage waste from every store.
Yeah.
So
that's significant.
That's impressive. And when you have a company like that make that kind of commitment, we are going to hold that up and say, hey, all you other sector peers.
Absolutely. Yeah.
Starbucks has laid down the gauntlet, and we're expecting you to step up.
That ties to my current favorite, which is around HelloFresh, that food preparation business. I know there's Blue Apron, many others, what have you. Yeah. So we finally broke down during COVID lockdown. And decided to get some of it, again, acknowledging our privilege, and we have food and many people have food. But so we got it, and then we tried it, and then, as a house, we sat down and said, well, there's a lot of plastic here. And so we actually have canceled our subscription, sadly. I mean, it tastes delicious. We love the convenience, but we're not up for that much plastic. Like, there has to be another way. So I know that's outside of your realm. I think they listed in the Netherlands or Germany or something, but
I'm completely on the same page. I also had a subscription. I also canceled it for similar reasons. Yeah. And loved the recipes, but not a fan of the waste.
All right. Well, we can start a kind of a micro investor movement towards
that would be great.
Okay, so let's land deep dive part 3 here. I'm just mindful we've had such a great conversation. We're running a little bit late. So ESG in 100 moments. So I'm working on this book project. Gene Rogers, the founder of SASB, has encouraged me to go forward with it. So it's happening. It's a history of ESG in 100 moments. And it's going to be accessible. It's not going to be a thick tome. There's going to be pictures and visually interesting. And if I had to show you this book, Lisa, and you had to flip through it one day, and then you finished flipping through it, and you'd look up and go, well, hang on, Graham, this is the most important moment, and I didn't see it here. What would that one most important moment be?
So I honestly think, and it probably would be in your book, was the disclosure, the explained disclosure regulation for pension funds in the UK, which was passed in the early 2000s, which was hugely beneficial and stimulative for the growth and demand for ESG research and analytics. And I think that was really significant. Certainly my previous firm where I worked at EIRIS experienced enormous growth in the 10 years subsequent to that, the passage. I think that passed in 2003.
Yeah.
So that's what I would say.
Okay, excellent. Thank you. No, that's a very, very good suggestion. All right.
You're listening to the ESG and Coffee Podcast, hosted by Graham Sinclair. Вы слушаете ESG and Coffee Podcast. С вами Грэм Синклер.
All right, so let's come into land then with our fourth and final set of espresso shot questions. And again, very short, and there is no wrong answer. I'm very interested to see what some of your answers are. You ready?
Yes.
All right, here we go. What is your favorite word?
My favorite word is bliss.
What is your least favorite word?
I don't know. Pass? I can't think of my least favorite word.
Pass. That's what the rugby players say, you know. What profession, other than your own, would you like to attempt?
I always thought I'd be a lawyer. So.
What profession, other than your own, would you not like to attempt?
I would not want to be a surgeon.
Yeah, I think I'm with you on that. What attribute does an excellent investor have?
Humility. Humility.
Okay. Which living person do you most admire?
Brian Stevenson, who was the founder of the Equal Justice Initiative.
Okay.
Just based in Alabama, which so he is the author of a book which was turned into a movie called Just Mercy. EJI fights for death row inmates who are wrongfully convicted, and he's an amazing writer, speaker, humanitarian.
Wonderful.
Highly recommend the film if you haven't seen it.
Wonderful. All right, we'll put that in the show note. Thank you. What talent would you most like to have?
I would like to be able to, sing.
What do you consider your greatest achievement?
What is my greatest achievement? I'm not sure how to answer that. I think I've been, you know what? I think I'm a really excellent friend. I'm a very good friend. I have friends around the world, and I think there are any number of people amongst my friend group who would hold me up as an example of a good friend.
Wonderful, wonderful. And what is your idea of perfect happiness?
That's easy. It is to be at sunrise on a beach doing yoga.
I knew it had beach in there somewhere. I wasn't sure what was going to happen on the beach, but I had beach. Done.
Yeah.
Thank you. Thanks so much. So an action question now for our audience. You know me, I'm action oriented. I'm about the how. Let's get stuff done. What action would you ask of the audience, wherever they live on the investment value chain, however big or small they are? What action would you ask them to take?
So whatever type of investment professional you are, or even if you aren't an investment professional, I would want to encourage your listeners to get familiar with what they own. Know what you own, I think, is my encouragement to you, and get more demanding as an investor of the folks who work for you.
Excellent. I second that. Hereby seconded. Right, and so to the final Goldilocks question, Lisa. One share of Tesla, TSLA, is trading on NASDAQ today at around $675, up 1.27%. As always with Tesla, it's never a flat day. Is that too high, too low, or just right?
I mean, I think it's too high. And that is because I have an ongoing discussion about Tesla with a good friend of mine who thinks Elon Musk is the cat's meow.
Right.
I think Elon Musk is a wonderful entrepreneur, a visionary, And I also have significant concerns around governance at Tesla, around a number of labor issues. So I would not feel comfortable myself owning Tesla. And actually, let me caveat that. Tesla may well go higher, so maybe it is too low, but Tesla's current price does not fully integrate the concerns that I have around governance or labor issues. So that's what I would say.
Thank you. Well, we've gone a bit long, but that's great because it's been a fantastic conversation. You've been a fine guest, Lisa Hayles, investment manager at Trillium Asset Management. You are one of the originals, as I've told you before. Thank you for your hard work over many years and making new paths in investment and the business of investment. I like to say the investments you make become the world that we all live in. So thank you so much for trying to make it better. And thank you so much for choosing to join me on the ESG and Coffee podcast.
It's my absolute pleasure. Thank you, Graham, for the opportunity, and looking forward to hearing many more of these wonderful interviews.
Thank you.
And now we keep the tape rolling to hear from Graham and his guest as they reflect on their discussion and anything they wanted to add.
So this is a moment for me and my guest, Lisa, to reflect on what we covered and what we missed or what we wish we had said differently. So anything you'd like to offer in terms of what you really wanted to get to and we'd never got to it?
I could have talked a lot more about engagement, which is my true love. I would just say that, I think being an active owner is an absolute necessity. It's part of fiduciary responsibility for investors, and impact in the equity space has to be linked to engaging actively with companies in your portfolio and, frankly, with policymakers.
Right.
To my point about the green wish, there's issues that absolutely require policy intervention, and investors can't really. I don't believe they should stand on the sidelines. I guess that's a normative.
Yeah.
My firm has done a huge paper on civic engagement, which isn't directly related to investing or really any of the companies in our portfolio, but having a functioning democracy really does have an influence on kind of the market.
It's not going to build itself, right? So people got to choose.
It's not going to build itself. So I think that's an area that I think is very important, and would like to see, more light directed to, more focus directed to engagement. I mean, Trillium is known for that. It's obviously an area. It's part of what appealed to me as someone who joined the firm recently. I've been fortunate that I've worked with firms that have been very active on the engagement side, and so that to me just seems, it seems like a no-brainer.
Yeah.
So.
And then so the question that always comes up, and I've asked elsewhere, is, active management. There's a fee associated. All performance is net of fees, and so part of the appeal of the collective vehicles like an ETF is that you're sharing the cost of that. Even a mutual fund, in some ways, you're sharing the cost of that expertise spread across thousands and millions of customers. So someone has to pay for the specialist to then do the engagements, and it would cost money, of course. And some people argue, well, if we perform the service, then there's this long tail of free riders who are going to get our engagement for free. So what is your reflection on that argument?
I mean, there is some truth to that argument, that there are free riders who benefit from the engagement that some of the more active engagers are responsible for. That is absolutely true. At the same time, I think we believe that the investment value chain and financial markets are not operating in a way that benefits our clients as it should, frankly. Or rather, our clients are very privileged because they have significant assets, but they are concerned about ways that the market is skewed unfairly, and so are we. And so we are determined to act in ways that try and rein in some of the, most extreme unfair aspects of the way the market operates. And we're also trying to influence other investors to recognize why these kind of excesses need to be addressed. And I mean, the fact that someone else could benefit from that is, that would not stop us from doing it because we just think it's the right thing to do. It's like other people may benefit, but that's not a reason not to do it.
Right. Good. Thank you. Anything else you'd like to clarify?
I'm trying to think if there's any word that I could give you instead of pass. My worst word, my least favorite word. Something to do with, being coerced or being forced to do something, but
compulsion.
Compulsion. Yeah, maybe. But I'm sure if I reflected, I could come up with other things I wanted to clarify. But I'm really appreciative of the opportunity to speak to you.
Yeah. I
thought it was great, really, really great questions and thoughtful framing, and a super initiative. I think.
Thank you very much.
Look forward to hearing I'm serious about wanting to listen to some other interviews. I think there'll be some really good discussion.
Well, now I'll take a few moments just to run through some episode high points from our interview with Lisa Hayles, investment manager at Trillium Asset Management. First up, I hope it was clear to you that Lisa works on the asset gathering end of the investment value chain. And she's working currently at Trillium Asset Management. They're a long-standing specialist ESG positive investment firm based in the northeast of the US, with offices in more and more cities, I've noticed. They're an active investment manager, so they're looking to select however many companies fit their portfolio strategies from all the available companies that are out there within the limits of areas where they exclude, areas that they focus on, areas where they engage companies on. In the approach to selecting their companies, they're going to exclude companies for negative social or environmental performance, and they're looking to invest in firms with positive ESG performance. I hope it came across in her comments. Lisa is, as she described, engagement is her true love. It's the work of active investors who know ESG factors are not properly weighed in business as usual today in the way that the markets and capitalism is working. And so they roll up their sleeves and get involved to isolate the ones that make the most sense for the various companies that they're investing in, the ones that are most strategic in the sector. They have the shop, they have the ESG specialists to help kind of outline what's happening at the sector level. But intriguing was that each fundamental analyst themselves will be doing that ESG work as part of the fundamental analysis of companies. For me, that is the better practice where I'm looking to advise investment managers on setting up the architecture and processes of their shops. Also importantly, that it's not just looking narrowly at portfolio companies. Trillium has done work supporting a group of more than 150 businesses calling for the passing of the John Lewis Voting Rights Advancement Act. There's a show note that will link through to that. Trillium is recognized in the industry for its shareholder advocacy work. You've seen them over many, many years working with consortia, looking to bring forward proxy actions or engage with companies on a variety of ESG issues. And so also in the show notes, I've included the link to the Alphabet, that's the Google parent, the Alphabet 2021 shareholder meeting where Trillium presented the vote on whistleblower protections. In the event, it didn't pass, but I think you'll enjoy listening to it to understand the mechanics of that. Secondly, Trillium's approach is marketed as, quote, active portfolios, global impact, putting assets into action since 1982, unquote. That's on the front page of their website. As with all U.S. registered firms, they're regulated by the Securities Exchange Commission in the U.S., so they have the Form ADV, and there's a link to that in the show note, and we referenced that a bit in the interview. It goes to describe, quote, "We begin with the universe of liquid publicly traded U.S. stocks and American depository receipts with market capitalizations greater than $250 million and that pass our exclusionary ESG criteria," unquote. In the approach that they take at Trillium across most of their strategies, I think, they're looking for financial returns on investment, business strategy, strength, growth, and earnings quality, profitability and efficiency, and financial leverage, unquote. New to me at the time of the interview, I was unaware that the Australian financial services firm Perpetual Limited had purchased a stake in Trillium. But good to know that Trillium is still a certified B Corp. And I'll include that in the show notes. I'm a big fan of B Corps. It helps align in the articles of association, in the way the firm is run. It helps align not just profit maximization, cash seeking, but all the mission-oriented aspects of a particular business. I think Trillium currently has around, I think, $4.3 billion US dollars in assets under management. At least it did at the end of Q1 of 2021. Third high point is that Trillium's approach looks at the incorporation of the ESG factors. They're trying to deliver risk-adjusted long-term investment performance. It wasn't quite defined in our interview. I think if you listen carefully between the lines, you can kind of hear the intimation of where that's at. And also, frankly, the offering to their clients of some kind of private equity exposure. We didn't have time to drill down into that. Maybe when we have our private equity series, we'll have them back to talk a bit more about what their approach is. Also, that the approach to looking at the ESG data is driven very much by the fundamental analysts who are doing the work. Again, I think that's the better way to go. They do create their own scores for the ESG performance of the company that the analysts will then use to determine which companies to put in the universe and track in the buy list. Fourthly, Lisa talks about the significant work that they're doing at Trillium on mapping diversity at portfolio companies. I think this is new, this is novel, and it's important. It's primary research, and frankly, it's part of a conversation that I think most companies are now expecting to have with their investors or with all their stakeholders for that matter. Subsequent to our interview being taped at the end of spring, Trillium has now released a high-level version, a summary of that report. It's called Trillium's 2021 Investment Team Racial Equity Project Overview and Outcomes. There's a link to that in the show notes. I encourage you to have a look at it. It's quite short, but it certainly gives you an indication of where they're heading. That project is still ongoing. I'm also hoping to do some academic research on some of that, depending on how it comes out and what the access to that information is. And the fact that Trillium is very active again is demonstrated if you look at their filing to the SEC call for information. The SEC requested input on climate change and ESG submitted in June 2021. I'll include that in the show notes as well. What is unexpected to me? Well, I didn't expect Lisa's favorite word to be bliss. I'm still waiting for her to tell me what her least favorite word is. Maybe it's compulsion, maybe it's not. Did not expect her to have kind of the gothic horror novel interest in a book club, but hey, we all need something different to clear the brain after a long day in investment land. Also new to me was learning that Trillium advocated with over 1,000 with around 80 other investors representing $620 billion in assets, that led to the decision announced a year ago on the 13th of July 2020 that the Washington American football team was retiring its name, mascot, and logo. And that was a direct result of engagement with sponsors and shareholders, as well as decades of Native American or First Peoples-led advocacy. And finally, I hope you too were uplifted by Lisa's positive attitude and enthusiasm. whether you agree or disagree with her, you have different ideas about what the approach should be or the strategy. There's no doubting her hard work, and after a conversation with her, you also feel engaged and energized and uplifted, and I really appreciate and respect that about her. Follow Lisa on Twitter and LinkedIn. That's all in the show note below. She's very, very busy, but hopefully because of this interview, you've got to know her better, and you can continue to track her career and maybe find ways to collaborate with her. So thank you very much again for listening. As always, ESG and Coffee podcast is not recommending any securities to buy or sell. Do your own research. Please do give us feedback on Twitter at ESG and Coffee, and look out there too for more items on upcoming episodes. And please come back to us with suggestions on compelling guests that we should interview, some of those originals who've been doing ESG investment for longer than the last bonus cycle. Thank you very much for listening, and I look forward to sharing our next interview with you soon.
We hope you enjoyed the interview with one of the originals in investing, strategy, and sustainability. Please subscribe on your favorite podcasting platform or on YouTube and leave a 5-star review. Bad reviews you can send to Graham Sinclair at ESG Architect. All the details are in the show notes. And for news of our next guests, follow us on Twitter or Instagram at ESG and Coffee. Do you know an impressive human we should absolutely interview on investment, strategy, and sustainability? Please let us know on Twitter at ESG and Coffee. Our producer is Kat Farquharson on Twitter at Kat Farquharson, and original music by Aaron Bonney on Twitter at Aaron Bonney Music. And of course, this podcast is for your enlightenment, not investment advice. Do your own research.
You have been listening to the ESG and Coffee podcast on investing, strategy, and sustainability, hosted by Graham Sinclair.